Greetings, Dr. Jeffrey Scott here. This is my market MRI Pro update for June 11, 2025. Sum it up, CPI was good. China on the surface, tariff negotiations, good. And then it leaked out that it kind of sounds like all we did was get a 6-month extension on getting rare earth metal. So who knows where that's at. And I think the market sold off as that became clear in the afternoon. I asked the question, is the evidence mounting that stocks need a breather? And I think the answer might be yes. But breathers don't mean big corrections. Breathers can mean sideways consolidations as well to work off the recent excesses of this V-shaped recovery. Again, my name is Jeffrey Scott, marketmripro@gmail.com, and my Google Groups is called Top Down Trader. As always, this is for educational purposes only. Anything we talk about should be taken in the spirit of investment advice. I like to show you how I take my tools and I apply them to top-down analysis. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades, and I am not a financial advisor. And I've got tools in multiple platforms and am an independent trader. I make my own picks. I trade them where I want to trade and how I want to trade them. My Google group is the best way of reaching me, and it's my best way of reaching you. Plus, I give you a $100 discount off of any tools of mine you might buy. It's called Top Down Trader. Just go to Google Groups, log into Google, and sign up and tell me how you want to be notified. Know your news and earnings. So today we survived. CPI came in perceived a little bit light year over year and core. That was pretty awesome. Tomorrow we get jobless, Thursday, and PPI. If we can get through this week intact with earnings season coming to an end, maybe we got a little bit run left to really test those all-time highs that are very close. But we shall see. Thursday we got earnings from Restoration Hardware and Adobe. I saw Restoration Hardware's numbers were negative today. I wonder if they reported early. I don't pay attention to them anymore. It's now called RH, and I call it I don't care. I used to care a lot because it really was a market mover and really said a lot about the housing and other parts of the industry. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings date. It is bad judgment to not know when your stock's earnings date is scheduled. As I mentioned with my title, I have some concerns. I'm going to jump into another program very quickly. This is a program that doesn't even exist anymore. No, that's not the Market MRI. It's this one here. It's called Stock Finder. And this was such an awesome program that the folks of Warden brought to market. They had TC2000, TCNet. I mean, they still have TC2000 now, the version that is fully on the web. And, good product. I like the old version because it gave you a set of data on your hard drive that you could use to populate other programs. But in Stock Finder, I had this great scan that looks for MACD Divergence. And I run it every day against the S&P 1500. And typically I see 5, 7, 8. And I ran it tonight, and I saw 83 stocks that have MACD divergence. And some of these are really big names, but look at this one. Microsoft. We know Microsoft is getting extended, right? We've got a little bit of a reversal looking pattern up here. It's hard to short Microsoft at a high. But notice, whether you look at the lines or the histogram, you've got a divergence on the MACD. Well, when I start to see that many MACD divergences, I get worried about the market. So I think there's something here, and I'm going to be a little bit more cautious. But let me show other reasons why I'm a little bit concerned. This is an ancient program. Boy, I'm glad Warden still updates the data for those of us lucky enough to still have it. Let's go into my Market MRI Pro, and we're going to start here with my daily performance. And you could see the VIX was up 0.86, the diamonds were flat. The market ETFs really didn't do badly between flat on the diamonds to minus 0.41 on the Russell, especially after the last 2 weeks of run up. Bitcoin down 0.72. They all finished in the lower third of their range, which is bothersome. New high, new lows on new highs minus new lows on the NYSE and the Nasdaq were modestly positive. When you look down here, the only sector that traded up on the market was yes, it was industrials. That's interesting. And then you look down here at the themes. You got uranium is still hot, clean tech, oil, gas explorations, energy, gold, cannabis, aerospace, solar, lithium, Norway, robotics, and then things go down pretty quickly. And it's interesting about the energy, but I think you'll see why, because there was a pretty significant increase in or improvement in the price of oil today. And I think there's multiple reasons for that. Perhaps some people are upgrading the potential for consumption if the economies hold up better than expected, especially if the tariffs mitigate some. And then I think the other reason is because it sounds like there's more conflict between the U.S. and Iran, and this isn't an easy negotiation. The other thing that I want to point out is this right-hand side of breadth. We have three indicators. We have four things in each one: sectors and industry. The colorful one is today. The gray one is yesterday. Then we have what percent we're up, and then what percent are above the midline. So everything's been bullish. So above the midline is 65, 63, and 66. We'll forget about that. You could see the blue versus the gray, the number of positive sectors or industry groups in either of the three indexes were down today. And if you look at advances, 31% in the S&P 1500, 37 in the Nasdaq, and 42% in the NYSE. So I would interpret that as some generalized weakness in the markets today. And I would just leave it at that. Was it a horrible day? No. As I said, the lowest percent on the major market ETFs was minus 0.41 on the Russell. If we go to the timing brief, you wouldn't expect any change today. And here's the daily. Everything is still in a buy. We're looking at the buy sell down here. Here is the weekly, and this should also still be in a buy. I don't think we've done enough damage, even though we can look at the weekly candle here on the Russell. Looks, whoops, that was a daily candle. It looked like a bearish engulfing pattern, didn't it? Let's go back to that for a second. But just show you that you gapped up here on the Russell and then had a doji. Is that the beginning of an evening star or a low close doji? I don't know. And you could argue that we're starting to stall a little bit, and maybe we're entering some consolidation. Let's look at that daily again, because that is this is this week. That was today, and that is a bearish engulfing pattern. And you're going to see in a subsequent chart, it was right at the 200-day moving average. So I think that's another quiver in the list of reasons why maybe we need a bit of a breather here. And on the monthlies, we are not yet in a buy on the Russell, which is interesting. If we go and we look at the major indices, let's blow them up one at a time like I did last night. These are daily charts. You can see the S&P, it's at a dark cloud cover. It's bearish looking, reversal. It opened up higher, closed lower. Still could go higher from here, but that's not a very bullish looking candle. We're within 2% or so of the all-time highs. The all-time highs are up here. I looked at this because that was at least a double or a triple top. And to me, I've got to get through that before I can even challenge new highs. So does this look like it's over? Not necessarily, but certainly was a weak day in the market. Weak is relative. It was not a great day. Similar candle on the Qs, and you could see down 0.34. We know that the diamonds were flat and everything else was better than minus 0.41. Again, getting close to, but not necessarily yet at all-time highs. And so you might see, and expect some element of a stutter in this range here. Let's just put a horizontal line on that guy right there. No, let's try that again, Jeffrey. Touch it. It doesn't work in this paint. That's right. Got to ask Praveen to activate that. So we're approaching a triple top. Again, does it have to fail here? No, but is it likely? Of course it is. And certainly have to be thinking that and hope that it goes through if you're overly long here. The diamonds, again, pretty clear that despite this breakout above the 200, it also looks, and way off its old highs, by the way, that it's consolidating here. Look, a retest to the 200 in all of these, I wouldn't consider that very bearish at all, especially if it bounced. And then the confusing and concerning one is the Russell's never caught up to the rest. And we were so excited. I even commented yesterday that what happens here to me is going to give me a signal of the market. And we not only failed, but we got a bearish engulfing pattern. And I think that's, yeah, and that's also a low close doji. So I've got a lot to be concerned that at this 200 obvious site of resistance. And do we just come back and retest the 17 or the trend line? That would be fine. Coming down to the 50 would be further, and breaking below that would be troublesome. So my antenna for a market pullback here is definitely sitting up a little bit higher. The volatility, as you would expect today, was up just a little bit. We don't want to have it that up. Oof, that would be bad. But you can see here up 1.83, and the dollar maybe defensive move today, but the dollar is really not doing well, was down another 0.37. Commodities, you would think weak dollar, rates were good, maybe they went up. Well, gold is still in this range here in its wedge, consolidating up 0.5%. Silver, oh, I hate when I do that, which had a massive move to new highs. Recent highs was down 0.84. Really, nothing's broken. But I think the star of the show on Wednesday is U.S. oil with a significant breakout. Again, I commented that the breaking down of the Iran-U.S. treaty talks, as well as some estimates of increased consumption. So I think there'll be some drill, baby, drill. And oh yeah, I don't think we've refilled our SDR yet. And there's a reason why it's called strategic, and hopefully someday somebody will actually fill it up. And you could see that tougher day in the market. The 10-year was down 1.21, and the 0.55 on the 30, obviously benefiting from a favorable CPI. Wouldn't it be nice to see these come back into the lower part of their channels? If we go into the buckets, you're going to see we came off a little bit because you can see yesterday's gray, today is green, shifted to the left a little bit, but I don't think it says that anything's going on. It certainly isn't a bearish looking one. So this is still supportive of going higher. And when I look at the market breadth, and make sure that's today, that's the market breadth may not, yeah, the market breadth isn't updated yet. I'll have to push on Praveen and get it updated. I thought that was a funny looking bar, but that's okay. I think I can talk without it. I don't anticipate any significant changes. Well, maybe it is up. Let's just see. There is the 10th. Yeah, it's updated. My bad. Not much of a move in the NYSE. Volume was not special today. You could see stocks above the 50, 20, and 200 have eased down a little bit on both the NYSE and the NASDAQ. The AD lines were actually negative, but the up-down volume was positive. No new signals. I would call today a pausing day, but I am concerned about that bearish engulfing at the 200 and low close doji on the Russell 2000. So that's my thoughts on the market. Risk is rising here, and it would be even without the PPI and jobless tomorrow. I would be very happy, since I'm still mostly long, to see a massive move and take out of the old highs before we pause, but it really wouldn't be that defeating to see a sideways move here, and maybe that would be a good thing. I don't think we have a big pullback imminent, although all you got to do is listen to some of the talking heads, look at some of the titles on YouTube, and a lot of people think that the highs could be in for a long time. Not sure I'm there right now, but I do think maybe we need to pause here. As I said, a breather. If we look at the ratio charts, you could see Bitcoin held up okay. Notice the weakness in defensive staples, utilities, real estate, healthcare, nothing going on. And it's hard for me to believe that that's a sign of a bad market, because in a bad market, those would be perking up. And that's what we watch. And discretionary's picked up. Tech remains strong, communications remains strong, and even industrials, which has pulled back some, which has been a leader, pulled back a little bit. Now let's go into the JAS layout and take a look at stocks from a top-down perspective. Let's go into the impulse list here. Let's let the list generate. And remember, this list is the NASDAQ, NYSE, and Amex, just $1 and $100,000 shares filtering. If we look in the top downs, we can see a lot of red. Now, just to be clear, this does not at all represent the S&P 500 sectors. We have assigned every stock in the 3,500 plus universe into their own, as you can see here. Will it work in here? Yeah, there you go. Industry group, sector, etc. So this is a broad list, and good or bad, and energy's up at the top. Now, energy is under in many of our portfolios. It's not your traditional growth group. It's been beat up for such a long time, and is it time to get into energy? So you might expect a lot of the stocks in energy to be pretty beaten up and not meet our typical growth characteristics. But let's take a look at the top 5 industry groups. Let's go down here and let's price 5 and volume 500,000 and take a look at, let's just rank them by 2-day short-term momentum. LEU is a uranium play. And LEU, like the rest of the uranium stocks, have done great. It's had a recent breakout. This thing doesn't belong up there. It actually belonged down here when we first started talking about it. And this was a great opportunity, a breakout. How high is it going to go? I don't know, but I don't chase things that have a high jump of 100. Canadian National Railroad, I believe is CNR, let's see, or is it Natural Resources? Pretty much a sideways move. Actually a big candle today with volume, a gap up off the prior high, volume breakout momentum with relative strength and OBV turning up. It was up in the market significantly, 6%. Let's see about earnings. Earnings are out on the 8th and were ugly. Surprise to the downside, but the revenue was okay. Pays a teeny dividend. I will find something more exciting. TRGP is an MLP. I believe Target Resources. Let's see what we got here. And that means it probably pays a very decent dividend payer. I like the MLPs. I'm into one called ET. Here only pays a 1.57. You can see very consistent data. And some of these are less tied to the price of oil. XOM is one of your does everything, refining, marketing, exploration, services. And this is typical. These things have been beaten up, still got to clear the 200. But with oil prices firming, maybe we need to pick something. And Integrate's not a bad choice, 3.61. Again, it makes a lot of money, has a lot of revenue. And then probably the leader has been, uranium has been the big boy, which is CCJ. We talked about it over the weekend. And this is another one that looks interesting. But if you look at the earnings per share growth, whoops, wrong one. You can look here at earnings per share. You can see it does make money, but it trades at a pretty significant PE. So there's no, and does not pay much of a dividend. So there's no question that something like this is being marked up because of the environment we live in. PSX is a refiner, I believe. Let's see. And this one's about to take over the 200. This one might be interesting. Earnings are 729 compared, it's going to be down compared to the prior year, but sequentially up nicely. And I think what matters for these is not just what the absolute earnings are, but do they surprise? VLO is another refiner up in a tough market. So maybe we should be looking at some of these oil services. Now, at least this one has taken out the 200. I remember this guy during the 2005 area of the oil crisis. And again, massive surprises, pays a dividend. 169 is going to come in against 271. That's not exciting. revenue at 2,700 versus 34. So you're going to see red on the growth sequential, but it's about the surprise that will drive the stock. So as you can see, it's hard to find beautiful looking patterns here. CVX down in the pattern, here, STNG, Tanker Group, let's see what it looks like. Again, very low in the bottom. Marathon Petroleum Corporation. This one looks actually pretty good. You can almost call that a big cup handle and getting ready for a breakout. Retrospective OBV looks good. But again, we're going to probably see garbage here. We're going to see falling earnings. Revenue has come down. Projected 347 versus 412 and 3169 versus 37.75. Pays a 2.5% dividend. This is a good company. So do you want to start doing them now? All of us are different in how we approach. Now we were looking at YPF with the growth in the non-US based stocks, and this one also looks about the same. If we go back into the impulse list, and I'm going to show you a new list today, but let's just start with adding in my 2-day momentum, because that's really my go-to. And we'll look at the full list of stocks that are $5 and 500,000. So we got BP. Now that's interesting because BP, like Chevron, Mobil, and others, is one of the integrated. It's about ready to take over the 200. Oil's breaking out. It's got 2 days of momentum in a row. I have no energy in my portfolio, or not enough. Pays a 6.21% dividend. We're going to see 62 cents versus $1. Don't have a revenue projection. Maybe we ought to be looking at some BP, especially if they cover above the 200. I love that dividend. I'm going to be looking at BP for my portfolio. Doesn't mean I'm buying it. Doesn't mean how I'm buying it. COOP. But remember, if you want to participate in the dividend, you got to own the stock. Mr. Cooper, I used to think of that Mr. Cooper tire ad as a financial play. Boy, the chart looks beautiful. It's got 333 coming in versus 252. Well, that's 80 cents. That's 30% or so growth. 66.92 versus 57, so 20% growth on revenue. Doesn't pay a dividend, but Mr. Cooper looks actually pretty good with the 2 dots, a nice established uptrend. And you could say, if you wanted to, maybe kind of sort of, if you like to look at these things, let's go to put this here. Touch it again, see if it'll do it this time. Why aren't you drawing me a trend line or a horizontal line there? Well, what I'm trying to tell you is it looks like it took out its prior highs. All right, we'll have to figure out what I did wrong there. But Mr. Cooper looks like it's breaking out. I like that. And remember, this is my go-to 2-dot scan. DNA, love the title as a physician. It used to be Genentech, but Genentech doesn't exist. Ginkgo Bioworks. Again, a cheap healthcare stock with big volume. 2 of my momentum drops. Everything else looks interesting here. I don't know this company from Adam. It doesn't make money, won't pay a dividend. Let's see if there's some news. And the news says Accurix, Telomere, 23andMe. I have, oh, there it is. Well, you can read the transcript and see why this stock is going up. But if you took away the name and made this a more expensive price, you got a giant base and you're breaking out with 2 momentums. Not so bad. Here is the MLP that I own, ET. I mentioned that I have an MLP. And, you know, the stock has performed okay over time. If we look at a monthly chart just for grins. It's not a growth stock by any means, folks, but after this peak in 14 and a pullback, it's had a pretty nice run off of the 20 lows. And I didn't buy it because I thought it was a growth stock. The reason why I bought it is because it used to pay like 7%. Now it's 6.9 because the price has gone off. And this is one of those MLPs in the energy space. That's probably one of the few that I have. GM announced some investment in reshoring of some plants. Not sure it's new jobs or just conversion of existing plants. Not my kind of stock. Petrobras, a Brazilian oil company that always seems to get great news and always seems to be about 12 bucks a share. I think I'll pass on that one. Redfin, RDFN, recent IPO. Again, what we're looking at is a stock pattern of those two momentum dots, which has been my go-to. Rocket, saw some M&A activity with this, which means I probably leave it alone because I didn't know too much about it. And I do know I like the next one, which is STNE, which is a financial services in South America. And for the longest time, this stock did absolutely nothing. You can see on the monthly chart, which will come up momentarily. Big IPO, it's just been doing nothing going back to 2021. But they have a good story. Let's take a look at their fundamentals in a second. Let's get the daily back. And let's look at their fundies. They're growing, lots of green. Not a big stock. Don't know what happened in here, if that was a mistake on the revenue. But the revenue, has come down over time. The earnings have come up. Multiples only 10. So it's not an expensive stock. It's growing its earnings much more than 10. To me, that makes it potentially undervalued. And let's see if I got the same. Yeah, I don't know why my drawing's not working. We'll have to talk to Praveen. But relative strength and OBV look good. 2 dots in a row, that I find that to be interesting. So that's typically where I like to stop here, but just want to show you something else. One of my long-standing favorite programs is HGSI. And one of the things that we love about HGSI is that every day it gives us a best 50. So what I like to do is I like to import that best 50 into my program here. And let me kill all my filters. If you don't do that, you don't get your list. Filter, kill, filter, kill, filter, kill. And by definition, these will all be 5 and 500,000 pretty much. And a couple of things looked really good today. So let me show you some of my others that I thought looked interesting. Again, take this all in the setting of, I think, a market that could be under pressure soon. Not yet, but soon. Celestica breaking out here, like the market, a bit of a V bottom, but you could almost call this a cup and a handle and a breakout. Big move. You have 3 dots, following breakout momentum, and a CPR, not extended. And let's see when earnings come out. So important to know when earnings are coming out. And earnings are not out until July 23rd. $1.23 coming against 91. That's about 30 cents. That's at least 25% growth. And revenue 265 versus 239. PE about 25, which is less than its growth rate. No dividend. I think that one looks interesting. I like that one. I have Robinhood, and I really enjoyed the run-up in the stock last week, which everybody thought, not me too, was because of a potential S&P 500 inclusion, which it didn't get. And what's interesting is I thought it would come down quite a bit, and really it reversed on Monday after dropping down here into the upper 60s, and it looks like it's ready to run again. So I'm still long Robinhood. And then one that just blows my mind, and I think these are one of these small nuclear reactor companies, Oklo, but you got to love this one. I don't think I have earnings on it. It's kind of a recent stock. But Oklo broke out big time today on massive volume. Now, I wouldn't be surprised to see it come down before it goes higher, but this one looks really interesting as well. SoFi and a lower cost stock. They have a nice stadium, don't they? Kind of reminds me of 2007 when everybody was naming stadiums, but SoFi Stadiums is pretty cool. Let's just see if they still can't. Let's see if I can't draw a trend line. Yeah, I think Praveen must have turned off the trend lines. I'll have him turn them back on. But SoFi is breaking out here. It's taking out these highs. Relative strength OBV looked good. And then we talked about STNE. Shop was one of my picks over the weekend. And, we saw some growth-related concerns on growth stocks on Monday. Tuesday it rebounded, a nice gap up on Wednesday, although I don't love where it finished. And then the other one was Sezzle. This is an interesting story. I talked about my stop management on at the seminar, and I'm fat in profits with Sezzle. And what I told people is after I've had a big run, I take my broker stop off, and then I will let the market tell me what to do. And so when this broke down on Tuesday, I elected to raise my stop and put it right underneath at the broker, saying if it trades lower on today, which is Wednesday, I want to be out immediately. And the stock gapped up and is actually back to more than getting back towards where it was over last week. Now, this candle here made me glad. Now, sometimes that works against me, but just like stocks that have a big move up, they tend to fade. Stocks that drop like this, typically the next day they fade higher. And that way I can either stay in a position I want or move my stop up actually higher. So those are some things that are going on in the market right now. And again, I just am intrigued by what I showed you in the beginning, which was a whole lot of negative MACD divergences in the S&P 1500. Have an awesome day. Don't forget, we're going to have a couple of educational programs from Market MRI Pro coming. If you were at the meeting and gave me an order and you have not gotten an email from me or an invoice or something for Praveen, please email me at marketmripro@gmail.com so I can get you set up. And we want to make sure you get all your subscription, meeting, et cetera, discounts. Take care, everybody. We'll see you probably tomorrow.